I'm Andrew Jordan with NodeWise CPA. A lot of business owners only talk to their CPA once a year during tax season. And honestly, I think that's one of the biggest financial mistakes growing businesses can make. Because if your CPA only shows up once a year to prepare a tax return, there's a very good chance you don't actually understand your financials well enough to safely run your business. Now, to be clear, I'm not saying every business needs a full-time CFO or a massive accounting department. That's not realistic for a lot of smaller companies. But as your business grows, the financial complexity usually grows faster than the owner realizes. And I've seen this become a real problem. We recently worked with a business doing around $8 million a year in revenue. They only talk with their CPA once a year during tax season. They handle their own books internally. The books were always behind, and honestly, they were kind of a mess. The business owner was basically flying an $8 million company blind financially. When we got involved, one of the things we found was that there was actually very little connection between their books and their tax return. The previous CPA had been making large journal entries for tax purposes that the business owner didn't really understand were happening. And this had been going on for years. The owner would hand over kind of incomplete books, the CPA would make adjustments during tax season, and then a tax return would show up to sign. That's not uncommon, by the way. A lot of business owners don't really understand their tax returns. They don't fully understand their financial statements either. And because the books are always late or unreliable, they stop trusting the numbers anyway. That's a dangerous place to operate from. Another example, we worked with a company doing around $1 million a year in sales. They handled all their booking internally and reconciled every single month. In fact, they were really proud of how clean the reconciliations were. The problem was they were actually reconciling incorrectly. They were recording deposits from their bank feed as income, but also recording payments against invoices. So they accidentally duplicated large amounts of revenue. Over a few years, they overstated their sales by hundreds of thousands of dollars. And because of that, some years that should have shown losses appeared profitable instead. Now think about the ripple effects here. Those financials were being given to the bank. Those numbers were being used for lending decisions. Those tax returns were being signed under penalty of perjury and filed with the federal government. And the business owner had no idea that the numbers were wrong. That's the scary part about accounting problems in growing businesses. Most of the time, it's not malicious. It's usually a well-meaning owner or employee trying to do their best without enough experience or oversight. But unintentional mistakes can still create very real consequences. And this is where I think a lot of businesses outgrow the accounting support structure they originally started with. Maybe the person doing the books was perfectly fine when the company was smaller and simpler. But once you start adding complexity, the level of accounting oversight needed changes too. That doesn't necessarily mean replacing people, but it may mean adding more support, structure, or experience oversight around them. This is also why we believe that people preparing the tax return should generally have visibility into the books throughout the year, not just during the scramble of tax season. Because good accounting work is not just about compliance. It's about helping business owners actually understand what's happening financially in their business while there's still time to make better decisions. That might mean reviewing financials regularly, helping clean up processes, answering questions about unusual transactions, helping with financing discussions, identifying problems early, making sure the books and the taxes tie together. Because if you're making financial decisions off inaccurate financials, it's a little bit like driving a car with a broken dashboard. You may still be moving forward, but you don't actually know how fast you're going, how much fuel you have left, or whether there's a major problem developing under the hood. At some point, that catches up with people. Bottom line, your CPA should not be someone who disappears for 11 months, then reappears during tax season to hand you a return to sign. As your business grows, your financial complexity grows too. And having proactive accounting oversight, clean financials, and ongoing conversations around the numbers is not just about taxes. It's about running your business intelligently and protecting yourself from problems you may not even realize are developing.